with FSD at some point, whether it's version 12, 13, 14, 15, whatever it is, whenever it is, it will eventually turn your depreciating machine into a money printing machine. The vehicle could make you 10,000 a year, 20,000 a year, 30,000 a year, who knows? Even if you have no intention of putting your car in a Robotaxi network, what's going to happen is
Tesla's most recent release of full self-driving that is pure end-to-end neural network based is getting rave reviews and is now widely being seen as the path to Robotaxi. So what was once a dream is fast becoming a reality as Elon and Tesla's AI team members themselves show confidence saying that now they're no longer compute constrained. Our guest today, Cern Basher, will do a deep dive on the financial models and value of Robotaxi. If you own a Tesla vehicle, what will happen to the value of your car once a depreciation machine to now a money-making one? And stick around till the end when we show what is the potential value to Tesla stock as each milestone is achieved. Welcome, Cern. Thank you for joining me yet again.
Hi, Herbert. It's great to be back.
So this is great. You do deep dive financial models. We've done a show previously on Robotaxi, but a lot has changed since then. The biggest one is people are now actually believing it's coming around the corner sooner than we think. And so I think it's good for us to go back in, show me your models. We'll look at all the different ways. I think that you're going to show me how the consumer, the car owner is going to make money, how Tesla might make money, how the fleet manager might make money. And then we're going to look at the impact of the stock as well. So why don't you kick us off, sir?
That sounds great. Yeah, it's funny, just at the outset here, it's funny to say that what seemed crazy just a few months ago feels maybe just a little bit less crazy today. And hopefully in a few more short months, it seems like reality may be coming very quickly.
Exactly.
So that's very exciting. Yeah, so let's talk about the future Robotaxi network. And as we look at this, what we really should think about in terms of Tesla vehicles, if you go to the next slide, is the vehicle itself is a vessel, and the software is the genie. The FSD software is like the genie, and the genie will be able to grant you wishes in terms of where you'd like to go.
Yeah.
Thanks to my friend Lewis for putting this together for me. But this is a good way, I think, to think about what FSD software is.
Yeah.
So when we think about the future Robotaxi network, there are three models, and they are not mutually exclusive. I think there'll be a combination of all three of these. I think there will be large fleet operators that will form pretty big companies and pretty big fleets in multiple locations. There's one company that I'm aware of in Europe, Mr. Green. They already have a fleet of 5,000 Teslas that they have been acquiring over time, anticipating a future Robotaxi network. So I think we'll see more and more companies like that. I think we will also see individual owners with their cars, whether it's one or two, or perhaps some individuals, purchase, several for this very purpose. And then I think we will see Tesla itself supply vehicles to the network. And I think this is necessary, particularly in the early days where there might not be enough vehicles in a given market. So they need to seed the market with a certain number of vehicles so that it's a good experience for the customers. Now, as we'll see in a minute, the Tesla-only model actually is the most financially attractive. So a lot of people have already commented on what Tesla really should do is stop selling vehicles.
That's me. I've been saying that for a long time. Yep.
Yeah, and so we'll see those numbers, see how that plays out. So just as a backdrop, and by the way, I covered these slides on a recent interview with Randy, and then some of these slides are the same, but quite a bit of the material in this presentation is new. So I apologize to those folks who may have watched both videos, but there is some new material here. Just as a way of background, when Tesla sells a vehicle, they make gross profit, so profit before taxes and some expenses, that range between $7,000 on the low end to about $15,000 on the high end. The average of all these quarters since Q3 2018 is $11,500, I believe. And right now we're at the lower end of that range. So, pretty healthy for an automaker to make that kind of money on selling a vehicle. But what we're talking about with FSD and the future Robotaxi network is something that is much different than this. If you go to the next slide. Yeah.
Mhm.
So the numbers from the previous slide there are on the lower left. On a net profit basis, Tesla might make between $5,000 and $10,000 on selling an EV net.
Right.
Now, depending on which model we want to focus on in the Robotaxi network, Tesla is looking at making anywhere between $50,000 to $125,000 over a 5-year period with the Robotaxi. And when they sell an EV, they don't get to sell an EV to that person again for probably at least 5 years.
Right.
But if we just look at a 5-year period, the opportunity in the Robotaxi network for profitability is potentially enormous. Now, the one on the right side, Tesla only, the opportunity is much bigger. Now, I don't believe those kinds of numbers will necessarily materialize. I think if Tesla ever did go that route, it would allow them to dramatically lower prices and more than they possibly could if they involved other parties.
Yeah.
So if we find ourselves in a highly, highly competitive situation where there are multiple companies providing robotaxi services, then Tesla has a lever that they can pull to put more and more of their own company-owned vehicles in the fleet. And we'll
Why
discuss
isn't it
this.
not just adding fleet operator plus individual owner equals the yellow bar on Tesla only?
Because with the fleet operator and individual owner, those two parties are taking their share of the profits. When it's
Mhm.
Tesla only, it's just them doing everything and not having to share the profit with anyone.
Okay.
There's also some cost savings. Tesla doesn't have to pay itself the FSD cost.
Gotcha. There you go.
Okay.
Okay.
Okay. So when we build a robotaxi network model, we have to make a whole bunch of assumptions. And this actually is a very complex business model. And I'm trying to simplify it as best I can, but there's even some complexity beyond this. But here are some of my assumptions in the model that we'll talk about today. I'll just run through these with you really quickly. The average speed of travel is 25 miles an hour. The average trip length is 5 miles. The percent of the miles that are empty are 40%. And so basically what that means is if the vehicle is taking you on a 5-mile trip, it has to go a certain distance to pick up the next person.
Mhm.
And so I'm assuming that that's, in this case, essentially two miles to get to the next person to pick them up to generate revenue for that trip. Right? If it's a 10-mile trip, then 4 miles are going to be empty after that 10-mile trip. So there's a lot of miles traveled by the vehicle where it's not generating any revenue. That's the empty miles.
Mhm.
I've also factored in loading and unloading time, and we'll see in a minute why that's important. A couple minutes there. I've assumed that Tesla takes 30% of the network revenue. This is Tesla's take rate of the robotaxi network. So 70% of the revenue goes to the fleet operator. And the reason is that they have pretty considerable expenses because they're buying and operating vehicles. I've assumed that the average vehicle lasts about 600,000 miles, that the FSD subscription cost is greater than the current $200 that's being charged now, goes up to $500. Now, I should also say that FSD pricing and the take rate are at two opposite ends of a
Mhm.
seesaw. If Tesla wanted to charge more for FSD, then they would take less. If FSD was cheaper, then the take rate could go up. They're absolutely linked. I run scenarios here looking at vehicle utilization, and this is the key factor in addition to pricing, which we'll talk about just below. The utilization is key. And what utilization means is the number of hours in the day that the vehicle is actually in the network operating,
Mhm.
right? And I run that between 30% of the time to 65% of the time. And I'll discuss that in a little bit more detail in a second. I'm looking at a range of utilization rates. Utilization is vitally important. In terms of the fare price, I'm looking at a base fare of $1.50. Just to step into a robotaxi will cost you $1.50 because the taxi has driven some miles to come to you. There's been some costs. You need to pay for that. The cost per mile, initially I'm showing here at $1 per mile. And then the cost per minute of idle time is in relation to how far can that vehicle go based on, if it wasn't waiting for you, how much revenue would it be earning? And so the cost per minute of idle time works out to 42 cents, and that's tied to the speed that the vehicle travels. So at 25 miles an hour, it's effectively 42 cents per minute. Okay.
So yeah, the base, the cost seems to be very, very good, of course, compared to Uber. What about the other assumptions? How do they compare to the Uber business model?
Well, the biggest difference is that you don't have to pay for humans to drive the vehicles.
For sure,
And
I said
that's,
the cost I
yeah.
get, but what about the other ones like trip length and empty miles and
I think these are comparable. I'm not completely certain of what Uber's metrics are on average.
mm,
It turns out that doesn't matter a whole lot, and we'll see a couple of scenarios here.
okay.
I mean, it does matter, but it's not critical. The biggest thing is vehicle utilization and the
Mm,
pricing, and so we'll focus on those two today. Okay, so again, in terms of utilization, here's what this means. In a 24-hour day, at 30% utilization, that means
mm,
that 7.2 hours the vehicle is in the Robotaxi network,
mm,
right? And so the rest of the time, the vehicle's sitting parked, or you're using it yourself, or it's being cleaned under
mm.
maintenance. But 30% means 7 hours a day it's in the network operating. Now, again, there's empty miles. So not all 7.2 hours is the vehicle actually generating revenue. 40% of the miles traveled, it generates no revenue. So the combination of those two things matter. But you can see as the utilization goes up to 65%, now you're looking at 15, 16 hours a day where it potentially is generating revenue for you. So the utilization here is critical. In terms of miles and trips, so at 30% utilization, an average of 5 mile trips, you're looking at about 20 trips a day.
Yep.
65% utilization, you're looking at about 42 trips, 43 trips a day. And the mileage goes from 164 miles a day to 355 miles a day. So it's pretty obvious now why utilization matters. More trips, more miles equals more revenue. Okay. So with the three pricing components that we have, the base fare is the dark blue. You can see what that is per day
Mhm.
per vehicle. The distance-based fare is the lighter blue. Obviously, the more utilization, the more miles traveled, the greater that's going to be. And then also the idle time fare grows as well because there's more people getting in and out of the car. Instead of 20 trips a day, it's 40, 42. So you're getting paid for that as well. So just visually, just to present the components of the revenue.
I'm just doing a quick calculation in my head. Even if it's $25 a day, which is the lowest amount, just on the base fare alone, just the base fare alone, if I can make $25 a day, times 10 is 250, times three for 1 month, that's 750. That's like 10,000, $1,750 a month.
Yeah,
That alone.
we have to take into account a whole bunch of costs, but yes, we'll see that here in a second
Okay,
what it looks like. Yeah.
great. Okay.
So it's also important to note that the revenue opportunity extends beyond the trip revenue. It also includes advertising opportunities. It also includes what I call curated experiences. Let's say you're in a new city, you're traveling to somewhere, and you want the car to take you around and show you the sights. There's no reason to think that it can't do that. It could also drop you off at a restaurant of choice, or it could even provide restaurant choices for you. And Tesla actually might make money from the restaurant owner to deliver customers to certain restaurants. So there's all kinds of opportunities there, right? There's entertainment and connectivity. Depending on the in-car experience and what they offer, they could charge for that. There's also distributed inference using the car's powerful computer as a way to provide AI services. Um, there's also, I didn't put this on here, but the car could be used as a delivery service. So when it's not being used as a robotaxi, it could be picking up groceries and dropping them off at people's houses, right? Or somewhere. There's different types of options like that. So there's a whole bunch of different revenue opportunities that you could layer onto a robotaxi network. And I've just included four there at very minimal amounts. These are not huge in this model, but I wanted to put them in there. They may well be more significant than I'm giving them credit for here.
Yeah, I think your advertising is probably way too low. Even the distributed inference revenue seems to be very low, but that's just my
Yeah.
quick thinking
Yep.
assumptions. Okay.
Yep. Okay. So Tesla then would need to split the revenue with the fleet operator. So here's how that looks. Tesla shares in red 30% of the revenue, and the fleet operator gets 70%. Okay. Now, let's take a look at it from Tesla's perspective on the next screen. Tesla not only receives the revenue that's in red, but they also receive the FSD revenue from the fleet operator. So it's a combination of the customer paying Tesla, the 30% take rate, and then the fleet operator paying Tesla. So this is what Tesla's revenue looks like per vehicle, depending on the utilization rate. Okay. Now, to jump all the way to the end in terms of profitability, let's look at the next slide. At 30% utilization, Tesla's net profit is something around 40%, $10,000 per vehicle per year. And if utilization is anywhere near 65%, the profit margins are in the mid 50s and potentially making $24,000 per car per year.
And that's per year. Versus
year.
if they just sold the car, they make 7,000 to 15,000, as you showed at the very beginning.
Yeah.
Here it's like 10,000 per year, every year.
Yeah. So it's a very different business model compared to selling vehicles. It's more software like, yeah, rather than hardware type business. Okay. Now, let's take a look at what this might look like at scale. So on the next page shows.
I'm just going to ask a question. The net margin versus the profit. I assume this was all profit, like all margin, like all straight. Like why is it so low, 56%?
Tesla has some expenses as well, and I've put in a pretty healthy amount in here.
Yeah.
Again, as you know, I try to be reasonably conservative in my modeling when I look at the revenue and the profit assumptions on a per vehicle basis. Yeah. Okay, this is a bit of a wild chart, but hopefully it conveys the message. So what we're looking at here is the net income for the Robotaxi network, okay, from Tesla's perspective, at different numbers of vehicles in the fleet. So starting on the left side is 10 million. And the different colors represent the utilization rates from 30% in red to 65% in green. Okay. So obviously, the more cars you add to the network, that increases the revenue net income potential. And you can see then how the utilization rate within each of those buckets matters. So let's just pick the one where there's 50 million vehicles in the Robotaxi fleet. The net income at 30% utilization would be $500 billion.
Oh, God.
Okay. And at 65% utilization, the net income is like 1.2 trillion.
That's per year, right?
Per year for 50 million vehicles in the fleet. Okay. Now, I'm not saying that this is by a certain year. I'm just showing the numbers.
Yeah.
If whenever this happens, if it's 2030, 2035, 2040, who knows? But you pick the number of vehicles you think could be in the fleet. You pick what you think the utilization might be, and you'll find yourself somewhere on this page. Okay. Now that was net income. Let's look at potential market value using a PE of just 30, which I think would be extremely conservative for valuing this type of business. So let's just focus on the red line. At 10 million vehicles in the fleet, at a 30% utilization, that gets you to a $3 trillion market value for a robotaxi business with that many vehicles. Okay.
And right now we have 5.5 million Teslas out in the wild today. And each year we're going to add at least 2 million. And it's going to grow, of course, but right now it's 2 million. So we'll get to 10 million within a couple of years.
Yeah, I think it's actually highly likely that by 2030, early 2030s, there are over 100 million Teslas in the wild. And we'll see how many will be in the fleet. If it takes them longer than 2035, the next 10 some years, there could easily be 100 million Teslas that are out there available for this.
So if there's 100 million Teslas, then you're talking 30 trillion. The stock is $30 trillion.
Yeah, I wouldn't think that necessarily all the Teslas
$30,000. Yeah, not all, but
yeah, and
the stock is 30,000.
No, that's not the stock price. This is the trillion dollars in trillions. This
Market
is market value of
30.
$30 trillion. If there
Right.
was ever 100 million robotaxis in
Gotcha.
operation
Yep. Yep.
at 30% utilization, just 7 hours a day, that would be 30 trillion in market value at a PE of just 30.
Uh-huh.
Okay, so if you want to use a different PE, that's fine. Just divide these numbers by 30 and then multiply by whatever your PE is, and you
Yeah.
can come up with a new number. Right. Even if you want to use a PE of 10, then that 30 trillion is 10 trillion.
Mm-hmm.
Or if your PE is 60, that 30 trillion is 60 trillion.
Mm-hmm.
So um, I wanted to give people an opportunity to look at, for where they think the robotaxi network could eventually be and the utilization that they think the vehicles might see, some ability to sort of look at this and say, okay, here's what I think the market
Mm-hmm.
value potential is.
Mm-hmm.
Okay.
Mm-hmm. And then to be larger than Saudi Aramco and Apple combined, you needed to be what, 5 trillion?
Yeah. And that's somewhere between 10 and 20 million vehicles in the network. It's not a huge number
Yeah.
in the whole scheme of things, longer term.
Mm-hmm.
Yeah. Okay, so this is from the fleet operator's perspective. Here are some of their costs. One of their biggest costs is FSD, and I'm assuming it's $500 a month, so $6,000 a year. They have to pay for the vehicle. They have to pay financing costs, and I'm assuming 8.5% interest rate. They have charging costs, they have cleaning, they have parking, they have insurance, they have potentially some of their own marketing costs. You know, particularly if they want to layer in some of their own advertising in the vehicles, and other operating costs, brakes, windshield wipers, whatever it is, tires and maintenance in general, and the EV taxes and other. So I think I've built in a pretty healthy level of expenses.
Yeah.
Okay.
Very conservative. This is crazy numbers you're putting in here. Crazy
Yeah.
numbers.
Now
This is per year. Yeah.
this is per year. This is at
Yeah.
$1 per mile. So that might be too high, and we'll look in a minute what it could be at lower levels. But just to show you, at 30% utilization, which is the lowest level that I think is likely, this is how it looks. Okay.
Mm-hmm.
All right. And then here is the same information, but for the other utilization rates. So what we just saw was the 30% column, the far left. That was
Mm-hmm.
what was graphed. And if you look out, here's all the numbers for the other utilization rates. So gross profit from 17, 18,000 on up to about 50. Okay. This is what it looks like for the fleet operator.
Yeah. I'm pretty happy because you put in quite a bit of costs. This is like pretty conservative saying, hey, this is not going to be cheap to run a robotaxi fleet operator. You're going to have to pay all these money. I was like, I'm shocked at how much marketing, just the dollars you keep adding there. It's quite a bit per
Mm-hmm.
car, per vehicle per year.
And most of these expenses scale up as the
Mm-hmm.
utilization goes up. FSD doesn't, that's
Right.
fixed. But you can
Yeah.
see charging and cleaning and all these
Cleaning.
other things go up.
Yeah.
Parking doesn't change, insurance doesn't change, but the marketing expense scales up with the revenue.
Mm-hmm. Okay.
Okay.
Mm-hmm.
So then this next slide is what the profit economics look like for the fleet operator. You're looking at about 23 to mid 30s margin percentage and making 10,000 to potentially $31,000 per year per car.
Per year per car. That's the
Per year per car.
that's the thing you have to keep in mind.
So pretty nice business.
Yeah.
Now, what I wanted to do then is on the next page compare this with Tesla's economics that we looked at previously. Tesla's in red and the fleet operators in blue. And so you can see at 30% utilization, they both make about the same amount of money. But as the utilization scales, the fleet operator makes more. And the reason is they have higher fixed costs. They should get a higher amount of the reward if the network is utilized more. Um, Maybe not to the degree that I've modeled it here, maybe not 40% more, but still, I think that the fleet operator should probably earn a higher reward than Tesla does as the networks utilize more. Okay. All right. Let's look at some variables. This is from the fleet operator's perspective. On the far left is my base case of 5-mile trips. If the trips are shorter, if the trips are half that, then the base fare doubles. The distance based fare is smaller, and the idle time goes up. So there has to be a mechanism in the model for short trips and long trips. And so I'm showing you here for half, for a 2.5 mile trip, what that looks like. And then the next column, the third one in, 20-mile trips. Very little revenue from base fare, right? But your distance-based fare is the majority, and the idle time fare is small. Okay, but you can see that there's some variability there. What happens if the car can go faster, 20% faster? Well, that helps. It generates more revenue. It can do more trips, right? That's certainly a factor. What happens if instead of 40% empty miles, it's only 25%? That helps too. And if the empty miles is 50%, well, that hurts. So you can see the variability around that. And then what happens if somebody falls asleep in the car? If you don't charge an idle time fee and somebody gets in who's drunk and falls asleep, then you're not making any money until that person wakes up. Now, maybe you have some mechanism in the car for the car to wake them up, but if the person's drunk, they're going to sleep no matter what. You could make any loud sound you want. It's not going to matter. So my suggestion is just have them pay. So that's paid nap time. If you want to take a nap in the car for a couple of hours, fine. You'll pay 42 cents a minute.
Yeah.
That you're in a safe place, no problem. Okay, and that way the fleet operator is not being harmed by a car that somebody's taking a nap in. So these numbers matter, but utilization is the key variable in addition to the cost per mile that the customer pays.
It's interesting because obviously you're being very conservative, but if I was Tesla and I owned the car, I'm not going to expect just to have 50% empty miles. I would try to obviously run this whole thing as much as I can and then just charging up. So maybe 70% or 20%, 30% empty miles. Maybe not. I don't expect 50% empty miles. That would be weird. That would be poorly run.
It's going to depend on the market. So a very dense environment, like let's say San Francisco or New York City or Seattle or wherever it is,
you can run
the cars won't have to travel as far.
Yeah.
But in a smaller location, there might be quite a bit of distance traveled between trips.
Gotcha. Yeah.
Right.
Okay.
And so it's a combination of optimizing it for the financial rewards for Tesla and the fleet operator, but also for the customer experience. Because when I want to get a car, I want it now. Yeah. I don't want to have to wait. So it will make sense to have a lot of vehicles just parked around strategically optimized for potential pickups.
This is all Uber. Uber's already figured this all out. There's higher fees, all that to accommodate for the empty mile to get to you, that kind of stuff. But okay, I mean, Uber knows all this. It's
and surge pricing as well. If there's a concert and there's huge demand, then you pay for that. Exactly. And if you want to take the words fleet operator out here and put Uber, that's possible.
Yeah, but I'm just saying Uber already knows all this data, and so Tesla is not going to have an issue finding out.
That's right.
Learning.
Yeah. So this page then shows those previous numbers, what it looks like from the profitability standpoint. So you can see it does make a difference to the profit margin and the profit per vehicle. So it absolutely makes a difference. So being able to optimize all these factors over time is going to be critically important. And so you can imagine that, an AI-powered fleet management system is going to be critical here.
I was going to say the same thing. Exactly. AI knows exactly how to optimize these things at this point. Okay.
Yeah.
And guess what? They're going to have so many cars. They're going to have this is another value, advantage of having more. The first to scale is going to be the win. The first is going to be the winner. Winner wins most. Here's one example. They'll just have so many cars out there, more than the competitors. They'll know how to optimize. They'll get more profit. They'll be able to it's a flywheel.
Well, like you said, it's Uber. So how many companies successfully compete against Uber? There's not many.
There isn't. I mean, the only one is Lyft, and Lyft is 15% over where they could never break through. And why?
Hmm.
They copied them exactly. They even have better marketing.
Yeah.
Uber even went through a crisis, and yet they couldn't break past the 15%
But if you think
because
about it, though, a lot of the Lyft drivers also are Uber drivers at the same time. They're
yeah,
on both. They're on both networks, and there wouldn't be an opportunity for a company to be in Tesla's Robotaxi network and some other
and
company's network.
right.
So it's even more
It's even
difficult, I think, in this market. Yeah.
interesting.
The other thing too, I forgot to mention in terms of potential revenue sources is a
Hmm.
subscription service for the customers.
Right.
And so there could be a
Yeah.
monthly fee that's it's in here.
I get guaranteed.
Yeah.
Yeah. I'm going to take this every day to go to work. I cannot risk
Yeah.
not having one ready for me at my time. Just got to, right.
Yeah. And
Okay.
having that schedule is going to be helpful for them in managing the network as well.
Okay.
So here's how these numbers then flow out for Tesla. It results in a little bit less variability than it does for the fleet operator.
Hmm.
And so that's partly why I say that the rewards, the upside should go more to the fleet operator because they have bigger downside risk.
Gotcha.
Okay. And then the next page kind of compares the two. Oh, sorry, I skipped that slide. All right. Let's look at the individual owner. So same set of assumptions, but now the FSD cost is $200 a month instead of 500. Okay,
Yeah.
that's the only thing I changed in this particular scenario. So we can go through this one pretty quickly. Here's the breakout between Tesla and the individual owner. The
What?
next,
Wait. Individual owner is going to get $37,000
yep,
per vehicle per year. What?
yep, at 30% utilization with the assumptions I had.
No. What?
Yeah,
That's a worse scenario. 30% utilization, which is like, I still get to freaking
yeah,
use the car.
yeah,
Now you got to work out for me what happens at nighttime because obviously that's probably I cannot not use I have to not use the car during the peak hours. The 30% needs to be peak hours, not nighttime. But
well,
Jesus,
it's 30% of the time, and the rest of I mean, 7 hours a day, it's in the network being utilized. So yeah, chances are it has to be at peak because that's when the network's going to be where the greatest demand is.
this is crazy.
Um, but yeah, some vehicles will be
I
needed throughout the night.
This is a job, dude. If I'm making 50 grand, some people if they're making 50 grand per year for
Yeah,
their car, they can just like do nothing. And then
yeah,
if you do nothing, you can like use 65% utilization. Just sit at
right,
home. Okay, I won't go use a car.
yeah, yeah.
Dude, this is not I can't believe this. This is too good to be true.
And so this relates to what we'll discuss in a little bit in terms of what happens to the value of used Teslas, and that's I think a surprising thing for many people. But here are the numbers in this table. I'm sorry, there's so many numbers, but for people that want to
Yeah.
see the details, the
Yeah.
30%, the gross profit for an individual is about $20,000. So, like you said, it's a
I
pretty good supplement to somebody's income, or if you have
yeah.
more than one vehicle, start
Yeah.
replacing your income. Yeah.
Yeah. The revenue is 80 grand, but now the gross profit for the 65 is 53,000. I
Hmm.
spent 30 grand per year on expenses, which again, hard for me to figure that out too. Like, why would I spend so much? But you got your charging, 4 grand, you got your
Hmm.
vehicle costs. So this actually pays for the frigging car. This is not like if I own the car. This is like if I bought the car for this service. Okay.
Yeah. and and
Jesus.
you and you can see that the vehicle costs go up over if as the utilization increases because you're going to
Yeah.
burn through the vehicle faster. So I've accounted for
Sure.
that. Also, tires and maintenance goes up. You're going to burn through tires if it's utilized at 65%. You're putting a lot of miles on the car,
Sure.
350 miles a day.
Yeah.
So yeah.
Okay.
Okay, and then here's what it looks like for Tesla. They get the revenue plus the FSD from the individual customers.
Hmm.
And then here's Tesla's profitability, very similar to the on the next page, very similar to the fleet operator, 40% margins at the low end, up to high 50s.
Hmm.
Okay.
Is it just can I just simply do the 5 times magnitude? So if Tesla now has a robotaxi network versus not having it, the car is now 5 times the value is what Elon was saying. Is that correct?
Minimum,
No,
minimum.
no way. Minimum five
Yeah,
times.
I think minimum. Yeah,
Yeah.
And we'll see here in a second when we look at the Tesla only model, which is coming up right now,
Yeah.
how much more upside there is if Tesla went this route.
Okay.
Now, this is contrary to everything that Elon and Tesla has talked about so far, but it may get
Yeah.
to the point where this is too good to pass up, and I'll show
Mhm.
you why.
Well,
So,
let me pause for a second.
yeah.
The only reason they should do this if it's in relation to the mission. If this is a faster way to get more miles driven, that's electric versus not electric, they should do this.
Yeah.
Do you think it's true? Yes, right?
That is partly true. The other problem is this, that even if they can make a low-cost robotaxi, let's say for $25,000,
Mm-hmm.
the value of that vehicle is way more than 25,000.
Yeah,
Okay,
that's why you
and
should sell it. Yeah.
we'll discuss that in a second. So, what do
Yeah.
you sell that vehicle for to people? It's worth way more than that. It's no longer just a vehicle that you drive and depreciate. It's a vehicle that becomes a money-making machine, as we just saw. It's worth way more. And this is our
Well,
argument
that's
with bots as well. You can make a bot for, $10,000, but the bot is worth way more than that. And so there's no way that they should be selling the bots. They should have a robot as a service, right? It's the
well, that's
same.
why they've already said that there's two vehicles they're making. One is the compact car, and the other one's a robotaxi.
Mhm.
Robotaxi means they're not going to sell this to anybody. This is a robotaxi that Tesla owns. The question is, once they make the compact car, do they need to sell it? Well, you remember the conversation that happened, right? The conversation was Elon said, let's go straight to robotaxi. We don't need to make the compact car. And then the
Mhm.
executive said, no, we don't want to risk ourselves. We have to have a plan B. And that's
Yeah.
why we're doing compact car. But now that, as we set this up, if robotaxi is higher probability that it actually will happen, you don't need to create the compact car. I mean, it's all about timing and
Mhm.
regulation. So all you still need to, but eventually you'll just make more robo taxis, which means Tesla owns the car. Yeah.
I think that's highly likely. So here are my assumptions here. It's the same, but the Tesla share of the network revenue is now 100%. They don't have to pay themselves FSD. They don't receive revenue. There's no cost, so that's free. And then it's the same assumptions initially. We will
Mm-hmm.
look at some other pricing assumptions in a minute, but let's just run through the same just so we can compare to the previous two models.
Mm-hmm.
This is how the revenue chart looks. So at 30% utilization, it's $62,000 a year of revenue. At 65% utilization, it's $128,000 a year in revenue, right?
Mm-hmm.
Profitability wise, you're looking at 40%, mid 40% profit margins. The reason that it's not way higher is because now you have all those costs that the fleet operator had. Tesla has to cover the cost of insurance and tires and maintenance
Mm-hmm.
and cleaning and charging, all that stuff. Tesla's doing all that themselves. But
Mm-hmm.
still, the net profit now is $25,000 per car per year
Mm-hmm.
with those
Have you
pricing
factored
assumptions.
in that insurance might actually plummet if you actually have a truly effective robo taxi? Less accidents?
Well, it's a combination of two things. Now Tesla has, big liability because, one
I
of these
see.
things
They're
crashes, you're going to have
take
big
it on. Mm-hmm.
lawsuits. Yeah, but
Mm-hmm. Mm-hmm.
ultimately it'll be safer. The data will prove that insurance costs should go down.
But yeah,
Yeah.
eventually, so right now it's probably a wash. Yeah,
Yeah.
gotcha. Okay.
Yeah.
Okay.
Okay. All right. Let's now look at a situation where it is Tesla only. We've gotten the fleet operators are not involved, individual owners are not involved. Okay, Tesla is making robotaxi vehicles. They've decided that they want to drive down the cost of transportation. Okay, what could this look like? All right, so what I've done now initially here is fixed the vehicle utilization at 35%. I want to look at just one scenario and then look at the impact of different pricing. Okay, so the green number at 35, we no longer have a range. Everything you'll see now is 35%, but I'm varying the pricing from $1 at the high end down to 30 cents. And then the idle time computes out between 42 cents down to 13 cents. It's based on the pricing and the speed. Okay, so let's take a look at that. So as you can imagine, as you drop down the pricing, the revenue comes down. Okay, that's pretty obvious. Okay, the base fare is the same, but the mileage revenue comes down. Okay, and then on the next page, you can see here that even though I have the other components very small, as a percent of the total revenue, they get a little bigger. So the blue bars are shrinking as the pricing comes down. I held the other stuff at the same level. Okay. So I didn't change any of those assumptions, but just naturally that would become a bigger percentage, and that might even be higher margin revenue than the other revenue. Okay. All right. This is a chart that I haven't showed before. This is the revenue per mile versus cost per mile. So at $1 per mile base distance fare pricing, you're looking at about $1.03 in revenue per mile. And the reason is those other services. So you can see I added about 3 cents effectively for those other services, and we think that's very low.
That's super low. I mean, like just
Yeah.
advertising alone, 3 cents per mile seems low.
Yeah.
Okay.
Now, in the model, I think it actually had 25 cents a mile, but because of the empty miles and the utilization and that kind of thing, it brings it down.
Mm-hmm. I mean, if you just think of Uber and what their advertising rate is for attention, it's quite a bit. Like, I mean, YouTube, it's a economy. Okay.
So just remember, as crazy as these numbers may appear to be at the end, we've tried to be conservative as we've gone through this.
Mm-hmm.
Okay, and then you can see the cost per mile. So yeah, this is the net of it. This is the gross profit per mile. So as the pricing comes down, you would expect the gross profit per mile to go down as well.
Mm-hmm.
Okay, so from 73 cents at $1 per mile pricing down to 28 cents at 30 cents per mile pricing.
Mm-hmm.
Okay.
30 cents per mile is crazy. Even $1 per mile is already very, very much cheaper than Uber.
Yeah. And you can see from a profitability standpoint, the profit margins go from 42% down to, high 20s. Still pretty nice. And from $30,000 a year per car and profit down to 10. Now, if you recall, 10,000 was the profit that the fleet operator that Tesla earned from the fleet operating business and the individual business at the 30% utilization. So now in this scenario at 30% pricing, sorry, not 30%, at 30 cents pricing, looking at a utilization rate that was 35%, we're getting down to that $10,000 level. So if there was ever a situation where there was a price war or whatever, Tesla could effectively drive down these prices to this level and still make as much money as they did in some of the previous models.
Yeah. And this is the thing that's people don't understand is that, LiDAR and all these other companies will come in and they'll just make it a commodity. No. Yeah. You have to have the fleet. You have to have, these guys can go down to 30 cents a mile. It's crazy. That's like
the ability to run this fleet at extremely low cost one day will matter. Not in the near term and not when the network first starts and maybe not in the first 15 years, but one day it will matter. And Tesla will have an ability to drive that cost down. Yeah. Okay. So this is a similar chart. This is Tesla only looking at the net income. Again, the colored bars in this case are the price per mile. So red is $1 per mile, green is 30 cents.
Yep.
Right. And as you would imagine, as the pricing comes down, the profit, the amount of profit goes down with it. And so instead of the lines going up to the right, now they're down to the right. But you can see as you scale the business, at 50 million vehicles, 30 cents per mile still gets you to almost a $500 billion profit. Maybe that's the 40 cents per mile one. It gets you to that 500 billion line. Okay, so it could still be a very, very attractive business. And then this next chart is the market cap using a 30 PE, so keep that the same. In this case, the red line is now on the top because that's your highest pricing at $1 per mile. And you go on down as the pricing comes down to the green line, right? And you can see what the potential market values are of the different businesses. Okay. All right. So if that wasn't enough, now let's try to combine a bunch of stuff. And I'm calling this over time, because what will happen initially is the pricing will be fairly high, or it could be fairly high. I think it'll be low enough that it makes sense, versus Uber at $2 or $3 a mile. So if Tesla starts at $1 per mile, over time as the network grows, and over time as the utilization improves, what happens if they drive down the pricing at the same time? So here I'm factoring in the vehicle utilization from 35 to 65%, and I'm driving the pricing down as that utilization goes up. Because utilization going up improves profitability, and pricing going down decreases profitability. So what happens if I combine the two?
Mm-hmm.
Okay. And in this chart, you can see that there's still a very healthy difference between the revenue per mile versus the cost.
Yeah.
Okay. And we can just kind of skip through these pretty fast. Here is the gross profit per mile, 38 cents.
Mm-hmm. Yeah. Still very
It's
healthy, no matter
very
what you
healthy.
do. Mm-hmm.
Okay. And then this one is a different chart. I'm looking at revenue per hour. So as the vehicles are being utilized more, as the utilization rate increases, while the profitability per mile comes down, the revenue per hour goes up. The cost per hour go up too. But as you'll see on the next page, the gross profit per hour goes up.
Mm-hmm.
$5 an hour up to, maybe close to $6. Okay. And then finally, the profits, 40% margins, high 30s. So at $1 per mile, at 30% utilization, they're making $25,000 per year on a car. At the other extreme, if it's only 45 cents a mile, at 65% utilization, they're making $28,000 per vehicle. So even driving down the price to 45 cents a mile,
Doesn't matter.
they can, if the utilization is high, if they're able to optimize it, the profitability is still there.
Yep.
Okay.
Mm-hmm.
And then finally, this chart with the bars, the colorful bars, all the scenarios pretty similar, and it's just a matter of scaling it, and you get to the different levels.
Mm-hmm.
Okay. And then finally, the market value, all those lines are almost on top of each other. Yeah. So there is a way for Tesla to get rid of that dispersion in these market values by optimizing the network and focusing on profitability per vehicle based on utilization and the price they charge. Sounds simple. It's going to be a very complex problem. But like you said, one that Uber deals with every day.
Okay.
Yep. All right.
Yeah.
Let's change gears. What happens to your Tesla, whether you have FSD enabled or not, whether you paid for FSD or not? So the concept here is that right now, all of our cars are depreciating machines. The left side of this image, again, from Lewis. Thank you, Lewis, for putting this together for me.
Mm-hmm.
But with FSD, at some point, whether it's version 12, 13, 14, 15, whatever it is, whenever it is, it will eventually turn your depreciating machine into a money printing machine, like we've just seen in the previous charts. The vehicle could make you 10,000 a year, 20,000 a year, 30,000 a year, who knows? Whatever the numbers end up being, it's a money printer. So it's no longer what you think a vehicle is, right? It is something different. It still looks the same, but it's now a money printing machine. So what happens to the value of your car? Even if you have no intention of putting your car in a robotaxi network and you say, I don't want people in my car, being trashing it, throwing up, whatever. What's going to happen is a fleet operator is going to come knocking on your door, and they're going to say, I want to buy your car from you. Right? So let's look at what that price might be. Okay. So let's say your used Tesla does not have FSD installed. So that your only option now is to pay the $500 a month. Right? I'm assuming that's what FSD goes to. Let's focus on the green. At a 30% utilization rate, Okay, with these numbers, I'm showing a potential annual profit of about $7,000 a year by putting your vehicle in the Robotaxi network. These numbers are slightly different than what I just presented, but similar. Okay. Let's go to the middle of the page, 30% utilization. If the vehicle is in the network for just 1 year, that $7,000 discounted by 15% is $6,075. So the person knocking on your door is, instead of paying $32,000 for your used vehicle, which is right now the average price of a used Tesla, about $32,000, that's average. They would be willing to pay you $38,000 for it if the vehicle just works for 1 year in the Robotaxi network. So that's a 20% increase in your vehicle.
Yeah.
If it works in the network for 1 year. Now, let's go at 8 years. Let's say you've got a little bit newer vehicle, or the vehicle lasts longer than anybody expects. In 8 years, the present value of that is $29,000 of Robotaxi cash flows, and therefore your vehicle goes from 32,000 to 61,463. It appreciates by 90%. Your vehicle value almost doubles if it can be in the Robotaxi network for 8 years. And that's assuming a return on investment to the buyer of 15% per year at only 30% utilization. Let's look at the blue, which is 40% utilization. Same calculations. The vehicle after 1 year of use is worth 30% more. If it lasts for 8 years, it's 160% appreciation, or 2.6 times. So even if you don't intend to put your Tesla in the network, somebody will come knocking on your door and ask you to do it, and they want to buy it from you. Returning depreciating machines into money-making machines. So naturally, many of the vehicles will float to their highest purpose, which is being utilized as much as possible, the 5-6 times that Elon has talked about. Okay.
But I mean, if you're going to make 40% utilization, $20,000 a year, why would you even sell your car just to make, 10,000 now? You can make 20,000 every single year. So you will yourself go, well, I'll go ahead and buy another car. I'll buy a gas car,
Maybe
an old car,
Yep.
and just use my car and just send this off to fleet. If I'm going to make 20 grand a year, I'm going to do that rather than selling it. You know what I mean?
Yep. Then that's the decision that people will have to make. Maybe some people won't believe that it's even possible. So the guy knocking at their door offering them 50% more for the vehicle, they'll take it.
Yeah.
It's money in their pocket today.
Yeah.
Okay. Now let's look at what this looks like. Well, this next couple charts is the visual of this. For folks that don't like numbers, here's the visual. Here's the multiplier of a used Tesla.
Yeah.
Depending on the scenarios. Okay. If the vehicle's on the network for 4 or 5 years, it doubles at 40%. And then the next page is the dollar value. So $32,000 Tesla at year 0 could be worth these various numbers, depending on how many years it's in service and depending on the utilization rate, whether it's 30 or 40%. Okay. Now, what about those people that have already purchased FSD? If we go to the next page, the numbers are even better. You've already paid for FSD, so presumably you won't ever have to pay Tesla anything for that again. You can put it in a Robotaxi network and you get the benefit of the revenue without paying that cost. So the opportunity is even greater.
Yeah, it's not like if somebody did offer you a car and let's say your car's worth $32,000 on average, it's not like they're gonna just pay you 41,000 and you're gonna be good to go. If anything, you'll say, well, for sure this car will last for 3 years, so pay me 60, 55, double the price now. It's you know what I mean? Like it just makes more sense that you'll ask for double the price versus
It
just a little
depends
bit more.
on how many miles are in your car and all what kind of shape it's in and that kind of stuff. But yes, these are all, it'll be interesting to see how this shakes out.
Yeah.
What I'm presenting here is the concept. and I'd imagine there'll be a lot of very skeptical people about this, but believe me, if you can turn something that was previously just depreciating into something that can make you money, you have an instant value increase.
Yeah.
Okay. And it's not just the value increase in Tesla's earnings potential, it's the value increase of all the Teslas out on the road today and in the future before this happens.
Again, this is where the statement that Elon made that is 5 times the worth of what your car is worth now. Instantly, once FSD is real, then your car has FSD. It'll be 5 times the worth.
Yeah, I think if we run the numbers at 50, 60, 65% utilization, you might get to 5 times.
Yeah.
I didn't do that here, just again,
That's what he says, right? He says a car is only really used 20% of the time. And so he's assuming it's just going to be running, all the time when you're not using it at all. You can use it and send it out. Yeah.
Yeah.
Okay.
And then here's the visual for this scenario, just so people can see that. But the bottom line is that, again, not to be repetitive, but we're turning vehicles from depreciating machines into money printers.
Yeah, money
right.
printers.
And I think a lot of people are familiar with this meme. This is what we're potentially looking at when the Robotaxi network goes live. And there'll be a mad dash to acquire vehicles for the Robotaxi network.
I'm glad mine is a Robotaxi. Or I've got FSD. It's the bet's paying off, right? The bet sounds like it's about to pay off. We're heading in that direction.
Whether it has FSD installed on it today doesn't matter too much. The value increase will still occur. If the vehicle is capable of running, FSD, then the value increase goes up. If you have a Tesla that doesn't have the capability to run FSD, then you won't see that, and unless you could make some kind of upgrade to it to install cameras and the new hardware.
Okay, so this last part here I wanted to walk through. You had a post on X that was very interesting, and it's like, it's one thing about here is your car, and then here's what happens when you get FSD, and here's what happens if there's Robotaxi for Tesla's stock and Tesla's business. But you actually believe that even before you get to Robotaxi, there's multiple milestones, and each time it hits that milestone, the stock should treat it as an option play, meaning there should be a rise in the stock value because there's a value now. And let's walk me through that. So your post, I'll read it here. You say that, in technology, it's all about progression. FSD has progressed slower than what was promised, but it's progression nonetheless. The thing about progression is that eventually you get there if you don't give up. Okay. So what does it mean? What is the value of FSD? It's a series of call options that are getting closer and closer to their respective strike prices. So you believe that, as the value of the FSD goes through, as it improves from what it is today to what it will be 6 months from now, a year from now, there's various milestones that'll hit. And each time it hits a milestone, there's value to Tesla. Therefore, there's value to the stock. So the first thing you said was making driving a car more enjoyable, less tiring. Just that alone should be a value to the car. Maybe people will pay more for the car because it's such. I don't think so. I think it's autopilot's there. People feel less tired. It's more enjoyable. I think it's a small value prop that maybe some people might choose this Tesla versus another car, but I think it's already kind of built in. Now making a driving.
Just on that first point, Herbert, there are about 14 million Americans every day that drive more than an hour to and from work. So some of those folks might like the opportunity to,
if they hear about
drive.
it. Yeah. But those people that are doing that, they're almost on highways. Highways already has autopilot. Highway already has, a lot of the cars have some sort of thing that helps that.
Sure.
But I agreed. Making driving a car safer and saving lives. So once it hits that bit, so even this is not Robotaxi yet. This is just full self-driving in your car, supervised driving. You're still supervising, but if you're told that, if you realize now that the stats are much safer because you have 8 cameras in the car, it's checking for you. This, I think, is a value. I bought a Volvo because it was marketed as the most safest car when my children were born. My wife said we need to buy the Volvo because it was that in her head, that was the safest car. And we did that. So there's a value in being known as the safest car out there for sure. I believe so.
And in more
But
recent years, I think people have tended to buy bigger and bigger SUVs
for
because
that reason,
if you drive a
yeah.
tank, then that's perceived to be safe. But the problem is then when the cost of gas went up, many of those
Yeah.
people suffered because of that.
Okay. So this I think is true. Now I do think this if you can say that the car is 5 times safer than an average driver and it's still supervised, I think just that alone, I think there will be. I asked you at some point to actually put a dollar or some sort of quantify this. What do you think? Right now, we're just going to walk through the milestones and let the viewer decide what they think is the value to the stock when this hit this, to how many increased sales that Tesla will have with vehicles because of this value prop, or the actual just, you know, yeah. In this case, it's
It,
just vehicle sales.
I
Or no,
will,
FSD uptake as well.
yeah,
FSD will go up too, right? From 20% right now to probably 50% if people know that this is 5 times safer.
yeah. And if there ever was a single reason for Tesla to do any advertising,
Yeah.
it is for this very reason. The more people that can be made aware that Teslas
Hmm.
are the safest vehicle on the road, then that's money well spent, in my opinion.
Although I will take back this comment I made about FSD uptake, because when it comes to safety, I think Tesla's been very clear that they will give that to own all Tesla owners for free, not to charge them for it. So it's
Hmm.
just more about advertisement and then increased vehicle sales.
Yeah,
And you're right, they will advertise like crazy. All
I
right, so
would.
let's walk. Hmm.
Just before we move on, I want to clarify one point that I made in the first part of this, where I said that FSD has been slower than promised.
Hmm.
Now, that was the wrong word. FSD has never been promised to be complete at any particular time. Now, Elon has been optimistic, and he said, I think it could be done by the end of this year and next year and so on. Those were never promises.
Hmm.
What's proven to be the case is this has been a more challenging problem than they probably could have ever imagined. So I just wanted to clarify that point. I didn't really shouldn't have really used the word promise. That's not the right word.
Yeah. Why don't you walk me through the next 3 milestones that you see?
Yeah, so allowing someone to drive their car without paying full attention, it goes beyond just safety. It's just if I have the ability to sit in my car and, you know, pay more attention to the scenery and just be more relaxed, there's value to that. Now, right now, we have this pretty aggressive steering wheel nag. And over time, if that wasn't in place and people could be more relaxed, then there's a benefit to that. I think there are more people that might say, okay, this is a value. Okay. Now, the big value add for sure is number four,
Hmm.
where if you can allow somebody to drive their car without paying any attention. Now, this may already happen today with people on their cell phones, right? The data on this is horrendous, right? And if there's ever a reason for saying that regulators can't wait to approve full self-driving, it's because of the cell phone problem,
Yeah.
right? The number of people that are in accidents and dying, and the healthcare costs, and all these other costs, the insurance costs. The insurance industry should be behind this one, right? Because of the money potentially saved. So if you're looking for a powerful lobby, a powerful ally to help in this regard, go talk to the insurance companies, as well as medical providers. So anyway, this for sure is a big value unlock when they get to this point. We don't know precisely when that is. The fifth one is licensing FSD to other automakers so that all their customers can enjoy points 1 through 4. Right? So there's a value unlock there too, because now you've expanded the market just beyond Tesla vehicles. And there are a number of
Well,
people that have
mhm.
speculated that is likely coming, and I agree with them. I think this is possible. Now they have to be forward thinking and start making vehicles with the cameras in the right place and all that stuff, so this is going to work for them. So even if a company, announced it tomorrow, it's going to be a few years before likely that they would
Mhm.
actually produce any vehicles that would be truly capable of utilizing FSD.
Mhm.
Yeah. And then the next one is what we've just been talking about. The software progresses to a point where you really can, it allows us to create Robotaxi service. It's an entirely new form of transportation that we've never seen before, new service. And what it would do, as we've just been discussing, it would reduce the cost of transportation. And for many people, they would decide that they would no longer need to buy a vehicle. So that also unlocks some interesting possibilities, because what do they do with that capital that they've freed up? They're going to spend it somewhere else. Okay. What do they do with the garage that they no longer need to park a car in?
Mhm.
Right. If it's
Yeah.
not already being used for storage, then they can maybe
Mhm.
renovate that garage and turn it into another room in their house. So there's a renovation opportunity, perhaps.
Mhm.
If we don't have as many vehicles on the road, because now we have an efficient robotaxi service, we don't need as many parking spots. There's a real estate opportunity there,
Great. Yeah.
right? The redesigning of American cities. And there's a fascinating YouTube video about how the parking laws came into being
Mhm.
and how many parking spaces restaurants and stores needed to have out front. The short version of it is there was no science behind it. We have paved over America for no good reason. Right? It's a
Oh,
fascinating video. It's a few years old now,
nice.
but it's incredible.
Wow.
And then number 7, this creates a new platform of autonomous transportation that will allow new services to be put on top of it. Right? And I think it's hard to sit here today and imagine what those could be. But that is also what will come from this. So the numbers that we just modeled in terms of robotaxi revenue, that's from number 6.
Yep.
We really haven't factored in really anything of number 7, perhaps except the curated experiences that I put in there. That's something new that's not possible today. Delivery services, perhaps. I mean, there's a whole host of things that that will come because of this. In my view, each one of these is a bigger and bigger unlock of value. And we've been talking today about number 6 and how big of an unlock of value that potentially could be. It's possible that number 7 is even bigger. And I haven't yet begun to wrap my mind around what that might look like.
Yeah,
Um,
there's a reason why Apple spent $1 billion per year for 10 years. They felt that they needed to have the eyeballs in what is the estimate? Like the average consumer person drives in a car, what I don't know, 5 hours, 6 hours a day, whatever it is. So you're basically spending as much time sleeping and then watching TV, and then now you've got this whole time that's been wasted. Now it's available for you to watch movies,
that's
and
right.
that is advertisement. And that just again use YouTube as your analogy. You know, how
Hmm.
many hours of YouTube videos do you watch, and how much revenue that brings to YouTube, the vendor, and just a lot. Just that's
Right.
advertisement. And then but what you were pointing out is that there's even more ideas, like revenue share with the restaurant,
Hmm.
revenue share with destinations. If somebody takes you there, and then they automatically charge them for the experience, whatever it is, yeah.
Yeah, the value unlock is huge, and it's going to change people's behavior. If we are successful in driving down the cost of transportation to what we think might ultimately be possible, then
Mhm.
the idea of getting in a robotaxi and sleeping in it overnight and going to Disney
Right.
World, right, becomes feasible because the cost is
So
so
easy.
low,
Yeah.
right? And you don't even need a hotel room anymore because you just
Yes.
go there and then sleep in the car on the way home.
Sure. Yeah.
So it's a
A
just
huge chunk. I'd say
yeah,
50% of people, especially, of course, the experience in the car. Obviously, they've got to really up
yeah.
it. But yeah, I mean, why not, right? Like a lot of people sleep in a train, but
Hmm.
it's just not, easy, not fast, but it's certainly cheap and comfortable. So people would prefer that.
Yeah, and these are
Hmm.
these are more specifically designed robotaxi vehicles, not Model Y,
Yeah,
Model
yeah.
3 that we have
An
today, right?
RV. Yeah, yeah.
Yeah,
An
or something like
RV,
that, right?
an entertainment vehicle.
Yeah,
Okay,
yeah,
this is fun. This is brilliant. We'd like you to work on these and actually come up with an actual, what your estimate is for the impact of the stock, impact of revenue to cut Tesla's business. Um, but the point is that you don't. It's not like just because you have to wait for Robotaxi for the value to incur. The fact that we see improvements every day, we're seeing FSD improving, and we're going to get to these milestones as we get there. There's going to be tremendous value already to both the stock and the business. So that's That's what the good
Yeah,
reminder is.
there for investors that can look beyond the current quarter or the
Yeah.
current year, there is no doubt that there's a massive opportunity. And it's just a matter of being patient. There's a great Warren Buffett quote where the stock market rewards those that are patient,
Yeah.
right? It takes money away from those that are impatient and rewards those that are patient. And I think that's what we're looking at here. The upside potential for this is enormous over many years. It won't transpire in the next quarter. I don't think that Wall Street's going to wake up tomorrow and say, "Oh my gosh, we've been looking at this wrong. We need to factor in the option value to this potential." But for individual investors that don't have to play that Wall Street game, you can look at this as a series of call options, right? And you do have the luxury of a little bit longer time horizon than a quarter, than a calendar year. And so that's where I think there's a significant opportunity.
Nice. Well, thank you so much, Cern. You do a great service to us, Tesla investors. You spend the time to actually work out these numbers. I've seen just a few of these, but yours is very well thought out, and you give it to the audience here to play around with the numbers and find out what you agree it is. But you've at least put the groundwork in. Thank you so much for doing that, Cern. This was eye-opening, and it was important for us to finally revisit this because, again, this is where we're at. This is what Kathy Wood and ARK Invest, that's what they're doing. And that's how they come up with their price targets. You've offered it for free for our audience. Thank you.
Yeah, and I would just say too that I appreciate the feedback that I get in the comments here on YouTube and in the community on X. This model that I developed a number of months ago, but I've been constantly refining it and making it better. So hopefully over time, the goal is to be less wrong and make it better and better. So thank you to everybody for for their input and feedback.
Right. And then Cern, people know that we started a company called Human Bots, and you've done an amazing, similar, not for Robotaxi, but for robots. And it's incredible the research that you've been putting in on that as well. So thank you, everybody. Check us out. Appreciate you. Bye-bye.
Thanks, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.